Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope all of you had a very beautiful day of trading today. And in today's markets, guys, well, it finally happened. We finally had a somewhat uneventful day of trading. Big change in relation to the last 1 month and a half, right? But definitely, guys, the bulls still do retain their control. The only news piece that we got this morning was, of course, the ADP employment report, which measures private employment in the US economy. And as a matter of fact, it came in much better than expected. About 143,000 jobs added as opposed to the 120,000 consensus. So that did wonders in at least upholding the markets. But one thing is for sure, guys, the market really hasn't done anything in the last 2 weeks ever since we got the day of the rate cuts. This was the Wednesday of the rate cuts. We got the big push up on the Thursday session, and the SPY ever since then has been largely flat. The same continues pretty much in the QQQs. Notice the Wednesday session of the rate cuts, the Thursday pop, and then since then a little bit of push, but pretty much back down to sideways. So the markets still remain in a very heated battle right now, guys. Recession, no recession. That is what we keep having to have an eye on, guys, especially in terms of the economic data releases. And we're going to have another big one coming up on the Friday session. Of course, that is going to be your non-farm payrolls, which measures public sector employment. And we also have the unemployment rate. If either of these two numbers comes in worse than the expectations, I do expect that to be the next big catalyst to move these markets and could be one of the reasons why we were fairly muted today and maybe even see some muted action into tomorrow. A lot riding on that Friday jobs report, so just be careful with the way you position your trades remaining for the rest of the week. So all of that being said, guys, in today's video, we're going to take a look at a few things together. Number one, go through our major technical analysis rundown of our major stock market indexes, see how those are shaping up. Number two, go through our big tech names, see whether or not there's still some discounts in those names as well, or whether or not we maybe should be a little bit more patient. And then, guys, go through a little bit of my trading list here and see whether or not there are still some opportunities in the market, or whether or not, once again, we should be a little bit more cautious. So with all that being said, guys, a lot to cover in today's video. Let's jump right into the action. SPY only up about 0.04%, basically flat for the day, and QQQ as well, right? Only about 0.14%. Now, there were some swings intraday, but for the most part, the SPY and the QQQs never really got above 0.2, 0.3, 0.4% in the positive direction. Taking a look at the heat map right here, you will see that today was virtually all about the semiconductor trade. Semiconductors having a very nice day. Big tech, not so much. However, only Apple able to etch out a few gains there. The rest of big tech kind of muted as a whole. Consumer defensives having somewhat of a pullback day, and Costco could be entering somewhat of a buy zone. We'll take a look at that a bit later. Financials not having the best day at all, but the sector did end up ever so slightly in the green as well. Taking a look at healthcare too, very, very mixed today. And the bottom half of the market as well, industrials, real estate, utilities, very, very, very mixed. Now, energy did have a nice second day of push through after yesterday's concerns for geopolitical tensions, of course. And I think that trade will remain as long as geopolitical tensions remain high through the month of October, potentially. We know that Israel is potentially preparing a retaliation against Iran. So that trade may continue to have a little bit of legs. But overall, guys, very, very, very mixed market picture. And I dare say, if it were not for the gains in semiconductors today, I do think that the markets would have been significantly red, probably about 0.5%, even 1% to the downside if this sector would have been either flat or down, because most of the names in the S&P were indeed red today. Taking a look at the one-day relative, guys, you can see that picture expressed even better. Energy and technology are only two green sectors of the day. Financials, barely any green. And to the downside, pretty much basically everything else. Where does that leave us on a one-week relative basis? Well, the overall market still remains relatively healthy. We know that the bulls are in a controlling uptrend, both on the SPY and the QQQs, but notable losses to the downside over the last 1 week have been in technology. Most of big tech names have been pulling back, and most of semiconductor names have been pulling back as well. Those have really been the things that are really preventing these markets from continuing into a one-leg push higher. So that being said, guys, let us jump right into the technical analysis right away. So the SPY, guys, where do we stand right now? Well, the bulls still are in a very, very, very nice daily uptrend. If you think this portion is weird, just look at the futures, right? The futures paint a much better picture. Beautiful daily uptrend, looking for the daily higher lows. So let's go back to the SPY real quick so it makes more sense. Looking for the daily higher lows, keep an eye on your support level down here, 564 down to about 559. However, be careful if through the next couple of days, the bulls give back the entire most recent leg of rally and take back 100% of the move here, well, then you can open the door for a lower high into lower low scenario as the month of October moves on. And then we would just be looking for a little bit of a weekly pullback. Beautiful weekly uptrend in motion right now. And the bulls do have tons of space for that pullback. Anything above 540, just going to be looking for that weekly higher low for possible further leg higher. So keep in mind this big support level that we just talked about and the confluence with the 12 EMA slightly below us. So I would not be opposed to a little bit of consolidation. We know the bulls have been a tiny bit tired after that rate cut announcement, right? Not much price action, but I wouldn't say that the bulls have lost anything yet. So we'll keep our eyes peeled, and as traditionally we do on the channel, take this one day at a time. Moving on to the QQQs right now, same picture on the Qs, right? Beautiful daily uptrend and pulling right back into our big area of support that we have not lost just yet. 483 down to about 478. Barely losing it the past 2 days, but the bulls are playing excessively good defense right now. Same thing applies. If we lose this area and come back too much into our most recent daily high or low, then the bears open up the door for the lower high, use this area of support as some resistance, and maybe set up for the daily lower lows into the month of October. We know a lot of uncertainty catalysts in the month of October, guys. Number one, election cycle. Number two, of course, has to be the geopolitical concerns, Israel and Iran. Number three has to be the port strike concerns as well, which are continuously weighing on the markets. And of course, number four is going to be any negative economic data in terms of either jobs or economic output activity, which will translate into lower GDP, of course, with that consumer discretionary pullback front and center. So moving on to financials. Financials, not looking too bad today, admittedly, guys. Very nice establishing of a tightening range by the bulls right now, looking fairly good. I'd be fairly mindful, though, of this lower Wednesday, last Wednesday's low right here. In the event we break it to the downside, that would be a confirmed daily downtrend and would send us into a little bit further weekly consolidation. But on the weekly, the picture remains the same. Beautiful weekly uptrend by the bulls and establishing a tightening range right now. So at this point on the weekly, guys, even if we lose this daily level right here and come down a little bit further, keep in mind at this point, anything above this guy right here, 4350 is just going to be looking for a higher low and possibly tighten up the range as we move further and further into the rate cut cycle. Financials should do fairly well. Keep in mind, they also have their earnings coming up in about 2 weeks worth of, actually, you know what? Next Friday. So pretty much 1 week away is going to be some of your major releases such as JP Morgan, Citigroup, Wells Fargo, and those lot. So possibly just establishing a tightening range before we get some further guidance with those earnings. One of the plays that I keep looking at in financials right now, well, I guess it's kind of an indirect financial name, guys. It's fintech, right? Not necessarily the banks or the credit cards, but Square has to be my favorite play in fintech right now. As per the banking stocks, I'm going to wait for them for earnings. And in terms of our credit card issuers, well, the trade has kind of come and gone. The trade was really down here. Now we're kind of in the middle. I did play Visa last week, as you guys may remember, on this big crush to the downside, and we made some decent profits selling some puts in that process. But as of now, not really looking for trades quite yet on either Visa or MasterCard. So the whole financial sector in terms of the banks and the credit cards is somewhat of a no trade for me, at least for right now until we get those earnings. Moving into healthcare right now. So healthcare not looking too bad today, down about 0.2%. And healthcare for the last month and a half, guys, has been relatively weak. One of your weaker sectors after putting in a beautiful rally in the month of August. The bulls got a little bit tired and now we're in full consolidation mode. So as of today, breaking the lows, setting the new daily downtrend. I'll remind you, what do the bulls need to do to reverse this daily downtrend cycle? Well, eventually we're going to have to put in an engulfing move of a most recent downswing. The most recent downswing is right here. So if you want to really see the bulls come alive at this point, we need to engulf. If we can engulf and then set the higher lows and reset to the daily uptrend, you will know that your weekly downtrend is most likely coming into an end of a cycle. And then we'll be monitoring the size of the bounce on the weekly, because now the bulls have lost the weekly uptrend as well. We know we're coming into big support down here, tagging the 12 EMA, and slightly below us too is this prior areas of all-time high, which is your next support, 151 down to about 150. So keep an eye on those levels right now, guys. In terms of the highest timeframes, the monthly, well, we know we're just expecting a monthly higher low for possible further trend continuation. One of my favorite plays I'm looking for in healthcare right now, where the bulls are playing excessively good defense, is Thermo Fisher Scientific. I brought it up yesterday too. Beautiful monthly uptrend, and look at this. Monthly bull flag above these two dotted lines, which is all of your resistance from the past 2 years. I love finding stocks that have been consolidating for 2 years worth of time while improving their fundamentals, right? So over the last 2 years, these guys have been flat, but they have not been dropping the ball on the fundamentals. Fundamentals should be improving right here. And also in terms of, well, that's in terms of the EPS, right? Big boom during COVID because this is a biotech name. And then thereafter, guys, also on the revenue front, we will be expanding revenue over the next few years. And take a look at all of your analysts' expectations. Most, if not all of them, are above the current price. So I do have a fairly bullish lean on this one, looking pretty good if you ask me, for a breakout, retest, and possibly run beyond the all-time highs. Well, actually back to the prior all-time highs, roughly targeting around the 660, 670 location for that swing trade on Thermo Fisher. So hopefully that's helpful for one of the healthcare plays that I'm currently looking for right now. Moving into semiconductors too. So semiconductors also having a very good day, right? They were really the ones holding up the market. As we can see, guys, healthy daily uptrend is still intact. We are reacting nicely from this area of support that we just came out of, 238 down to about 224. So you can see the bulls playing defense right here at the top end of the support level and right around all of the moving averages acting as confluence too. So taking a look at the hourly time frame now, the bulls have now reestablished the hourly uptrend, which leads us to believe that this daily leg of selling is possibly finished, and we may just be due for a second attack at this resistance zone, which is 257 down to about 249. So we'll keep our eyes peeled, and I do still maintain, guys, one of the best ways to currently play semiconductors with all the volatility, all the uncertainty in the markets is by selling puts on your favorite names well below the current market price and benefit from that volatility and put some of that premium in your pocket. So we'll keep our eyes peeled on this one. But as of now, even on the weekly, guys, still in somewhat of a tightening range. Of course, that is until we break through this resistance area. If we can do that and get a weekly close above, weekly uptrend is reestablished, and we can say for sure that the monthly higher lows are set and possibly going for that second batch of monthly upswings into the end of 2024 and into 2025, which is also in line with all of your major semiconductor players in the market right now. They've been saying that earnings and revenue should continue increasing into the second half of 2024, specifically Q4, which we're about to embark into, and especially into 2025. So let's keep our eyes peeled out, guys, for the possible breakout on the weekly. Moving into IWM Russell, not looking too bad today, but also not doing a whole lot, right? Down about 0.14%. Daily downtrend still clear as day. I'll remind you, what do you need to see for the daily downtrend to be reversed? Need to see a big enough bounce or a fully engulfing move, create some space, set up for the daily trend change. As of now, the bears still do remain in full control, and you can even see that on the weekly, right? Looking like formation of a tightening range. So I still do maintain, guys, for the Russell, I'll be looking to only make plays if we can make our way back down below here in the 211 to roughly 210 area, looking for this range to tighten up a little bit as we move through this uncertain period during October, right? Very, very, very difficult for a lot of growth stocks to run when we have so much economic uncertainty potentially still ahead of us, right? The battle of the narratives right now. Is the market clear? Is there going to be no recession? And can growth stocks be allowed to run? Is there going to be a recession? Well, right now we have too much conflicting data, which is why institutions are very hesitant to deploy large sums of capital into the risk on trade, aka growth stocks. Moving on to the Dow Jones right now. Dow Jones also not looking too bad, 0.09% to the upside, and the Dow Jones just following the same pattern as the rest of our indexes. Daily uptrend is in motion currently. Keep an eye though on last Wednesday's low. If we were to lose Wednesday's low without setting a new high, guys, that would be a loss of the daily uptrend, and you run the risk of setting up the bears for the lower high into lower low, which would be a daily downtrend, and conversely would also be signaling a weekly pullback. So as of right now on the higher time frames, weekly bulls are in full control. So any pullbacks on the weekly, guys, for a swing trade on the Dow Jones, I am all for it. Target this area of confluence down here, talking about 41.3 all the way down to roughly 41,000, and the 12 EMA on the weekly is right there as well. Looking for the breakout of the all-time highs, retest of prior all-time highs and your 12 EMA, and possibly continuation of the run. Dow Jones, more of a defensive index as a whole, so I would not be surprised if this one continues to be somewhat of an outperformer as we move through these uncertain economic times. Now, we're going to do a very, very brief rundown of the rest of our indexes since we have time today. So here's consumer defensives. Consumer defensives has a very, very, very good August, but now pulling back in due form. completely normal here, guys, right? Tremendous 7, 8, 9, 10, 11 week rally. And where are we possibly coming back down into, guys? Well, you need to look no further as your prior all-time highs. So that could be a pullback where we might be expecting. I'm not saying we're going to get all the way down here, because that would be pretty much another, roughly call it 3%. It can get down there, and that will kind of be our best case scenario, right? It would look beautiful on the monthly in terms of a monthly uptrend breakout, retest the all-time highs, and run. My favorite plays in consumer defensive right now are Costco. I'm looking for Costco for a little bit of a dip area right now, about 866 down to about 850. Could be a nice target range for Costco. And one of the other ones that I've been playing as of recently is also Colgate-Palmolive. I like this setup on Colgate-Palmolive, guys. Usually it stands the test of time in terms of maintaining the 12 EMA, but it is coming into a very contested area in terms of a pullback, right? This 12 EMA cannot lose it. If we lose it a little bit further, guys, the last area for defense that I'm going to be looking to possibly build a further of a position is, let me just mark it up on the chart for you, these guys right here, right? So here we have a bunch of support areas in the past, was resistance too. So this would be the last area where I'd be probably looking to build a little bit of a position as we move into further weekly pullback, as we move into further monthly consolidation. I still like this stock a lot. I think it's going to be one of the big winners here ending into 2024 if we continue moving into economic uncertainty. Just at the current levels right now, it still has a little bit of wiggle room to the downside. Moving into XLU. So XLU also just a complete powerhouse right now, moving very nicely, guys. Daily overbought conditions a little bit, and the weekly too. Very overbought conditions on the weekly. Now, we are expecting a potential pullback eventually on utilities. Usually they do not run as far away from their 12 EMA as they are right now. And I will be a buyer in the event utilities pull back towards their prior all-time highs, talking about maybe a retest right here of about the 77.50 area, which would kind of line up. The 12 EMA is going to be curling into there too. So if you can get somewhat of a weekly pullback into the highs, could open up some good swing trade opportunities. In terms of real estate has also been a very strong sector in the month of August. As you can see, July and August, when we started rotating from tech towards defensives, and now, similar to the other ones, have been pulling back a little bit, got extended from its 12 EMA, but that's okay. I'll be looking for a pullback on one of these too. The ones that I'll probably be looking for, guys, is Vici. If I can get Vici once again back in the under 32, call it about 32 to 31, I'll be shopping for one of my favorite REITs moving forward. And now lastly, energy. So energy, once again, an outperformer on the day today, 1% to the upside. Not quite through our big area yet, are we though? Still in the area of congestion right now. So really need to get a break above this to get the weekly uptrends back going for the bulls, get an engulfing move going, and then probably set a higher low and move on forward. Obviously, this is highly predicated on the prices of oil, but if one thing's for sure, if we continue these geopolitical tensions, I do believe this sector will remain an outperform. And some of the names I'm most keen on playing remain OXY coming down significantly, right, over the past month and a bit, but I do think it's a decent buying opportunity, even though we're kind of in between two zones. In the event we fall further into the high 40s, I'll be buying again. For now, I'm happy with the positions that I built at the 55, so we're a little bit underwater on those, but I wouldn't be too concerned. And the other one that I like a lot, guys, is CVX. CVX coming nicely off the lows right here. So in the event we get a little bit more oil weakness and retest the lower, maybe the lower to mid 140s where this 200 daily moving average is too, that could be a decent little opportunity for some swing trades on oil through the month of October and possibly November as well. So that's pretty much a recap of the full market, right? We don't do it very often, but I figured today, since we have the time, may as well get it done. Now, TLT, taking a look at TLT, 20-year bonds. This trade has really come undone since the infamous rate cut cycle. Why? Well, because the Fed keeps signaling a soft landing, and TLT is usually a trade that responds well to fear in the markets. Suffice to say, if there's not enough fear in the markets, TLT does not go up in an aggressive fashion. This one, however, does benefit from the fact that rates are coming down progressively over time. So take a look at your 20-year yields. You will see that we have now embarked on a very healthy monthly downtrend. But we can be able to set up some lower highs into lower lows, right? These things take a lot of time to shape up, guys. So essentially what I'm saying is TLT will probably be going up very slowly over the next few months just because interest rates will be going down. I think this one is good, guys. Whether or not we get a recession doesn't matter. Yields will be coming down. If we do get more recession headlines, perfect. This one will just accelerate. But even if we do not, and they stick the soft landing, this one will be grinding higher just as a byproduct of overall rates coming down. So it's kind of a win-win situation, but you have to be really patient with this trade. Just a reminder, guys, it's not semiconductors, right? These are bonds. They do not usually move that quickly, but it's a very good hedge trade nonetheless. Moving on further down, let's jump into our big tech name, shall we? Moving into big tech, Apple up about 0.25%, still struggling, however. We're kind of trapped right now between the 227 and roughly 224 level, and that's kind of been the case since August, right? Very, very, very challenging area for Apple right now. That being said, the bulls still do control the daily uptrend ever so slightly, but it's kind of turning into somewhat of a range-bound price action right now. If we were to close below the lows of today, talking about 223.50, close below there, and unfortunately, you set the double top and lower low, that would unfortunately be daily downtrend, and we will be dealing with a little bit more weekly consolidation for Apple. As you can see, Apple has really been stuck in this price range here, call it 228 down to about 220 for the past month and a half, almost 2 months worth of time. So key point is focusing on the short-term price action, guys. Of course, if we get a break higher and break these all-time highs, everything is good, and that is what the bulls are looking for, guys. Triple tops here on the weekly. We need a weekly close above 233. Give me a weekly close above 233. The bulls have full control of the weekly time frame once again, and we can possibly estimate that a next leg of monthly expansion could possibly be underway. But I have my reservations for Apple, guys. Once again, the valuation is extremely high right now, and the revenue growth is not that good. Couple that with the fact that the iPhone 16 release pre-orders and current sales are slightly underwhelming against the expectations. So I'm not expecting Apple to do this, in other words, right? If anything, we may just be due for a little bit more consolidation over time. And at the worst case, if the markets really fall apart, then we'll start revisiting some of the lower levels. I would only be interested in Apple once again. I always say it on the channel, only interested in Apple, guys, if we fall below 210, more specifically closer towards 205 to 200. As of now, I just don't see the benefit, any good risk reward for some short-term swing trades all the way up here. Moving into AMD right now. So AMD, flat on the day, right? Contrary to its sector peers, which had a very good day, AMD was relatively flat. Still kind of dealing with this pullback, but AMD looking still very healthy. Nice daily uptrend underway, looking for the daily higher low, and at this point, anything above 148, just looking for that higher low for possible further trend continuation. Keep in mind, this whole area right now, roughly about 163 down to about 153, is going to be tremendous support for the stock. It's been a highly contested area this entire time, and we're now above all of our moving averages too. So it should be quite difficult for the bears to cut through this location without some big support by the bulls, unless the overall market completely falls apart. Then it's anybody's game, of course, right now, right? But I like this one. The daily is looking good. The weekly is also looking good. Even if we were to pull back in a significant fashion, guys, and retest the 150s down here, what are we looking for? Anything above 132, looking for a weekly higher low for further weekly trend continuation. Beautiful weekly trend in motion. So I remain with the same attitude that I have been on AMD over the past couple of weeks. Any big pullbacks, any big red days should be a great dip buying opportunity, especially if you're looking to write short puts under the 150 mark. Call it 150 down to 140, as low as you can get depending on the size of the move. Love writing puts on this stock. And I'll remind you guys, AMD is going to be one of the big winners into Q4 and into next year as well. This is when their EPS expansion starts. This is a quarterly chart. This is when their data center ramp starts. And look how it carries through 2025, 26, and 2027. And here's your revenue. Big revenue bumps in the next 2 quarterly earnings and huge revenue increases 25, 26. So this one should be the big winner for 2025. That is just my humble opinion. Moving into Amazon right now. Amazon not looking too bad as a whole, down about 0.2%. We actually had a swing trade on Amazon over the course of the week, 180 short puts. We closed that for a very nice profit today. So Amazon currently, what is it doing? Well, they had the daily uptrend, and now we're on the verge of losing it, right? If we close below 183.37, suffice to say the daily uptrend is lost, and you open the door once again for the bears to set the lower high using this area of support above us. It used to be support. Now it's going to be resistance. So I should change this one red in front of everybody so I don't confuse anybody. Apologies for that. Let me do it right now. So moving this on to red. And you can see that they have a possibility here. If we drop too much, use it as resistance and set up for the daily downtrend scenario, which would be fine because when we zoom out to the weekly, we can see the bulls control this time frame entirely, right? Looking for a weekly higher low Anything above 169.50, looking for a weekly higher low for further trend continuation. So in the event we retest the lower 180s, guys, I will be looking to continue swing trading Amazon in that location, as I am anticipating a very nice earnings session from them, and especially leading into Q4, which is usually their best quarter, and especially considering Black Friday and things like that, right? Moving into Google. So Google down about 0.66%, but that's okay. Google has room to spare. Beautiful daily uptrend in motion right now. Simply looking for the daily higher lows. Anything above 162, looking for the daily higher low for possible further trend continuation. So all of these guys will be acting as short-term price support. Couple that with all of your moving averages as well, will be acting as some decent price support. So not too worried about Google. We only get worried if we take back too much of this move. It opens the door for the daily downtrend. And at that point, Google would just be looking for a weekly higher low for possible setup of a new weekly uptrend, because we knew we lost it back here, right? So now they have to do a lot of work to get it back again. Google is actually one of the only ones that is not recaptured. Apple has recaptured. AMD has recaptured, as you can see. Amazon, which you just went through, has recaptured the weekly uptrend. The only one in all of big tech, even Microsoft, has recaptured, right? This is the only one in all of big tech that is not set up for the new weekly uptrend. So suffice to say, any pullbacks on Google, guys, into the lower 160 area, I will be buying the dip once again and looking for that weekly trend expansion into the higher area of resistance, 170 to 180. Now, moving into Meta. Meta down about 0.63%. Not too bad of a day for Meta as a whole, but still consolidating right now above the all-time highs. No red flags to speak of whatsoever. Look at this beautiful daily uptrend right now. Continues grinding higher. So at this point, any pullback looking for a higher low, anything above 555, just looking for the daily higher low for possible further trend continuation. But if the market falls apart or Meta falls apart and we cut this low and move lower and set up for the daily downtrend, just to set the expectation, guys, what are we looking for? On the weekly, looking for the weekly higher low for further trend continuation. And if we pull back here, guys, I will be going fairly heavy on Meta. It's one of my favorite trades, guys. The breakout of the all-time highs, retest the all-time highs as support, and then run. So I'll be looking heavily for a trade on Meta around the 543. In the event we do not get any short-form pullback at all, the next target for the bulls is going to be sitting at that 600 psychological resistance. Moving into Microsoft right now, give me a very brief second. I got to do it at least once during the video, right? So moving into Microsoft, down another 0.85% on the day. Microsoft daily downtrend does continue. No company specific news, guys. This is all price action. I can guarantee you the fundamentals of Microsoft have not changed in the last 2 weeks of trading. No red flags whatsoever. What are we looking for? Considering the fact that we have the daily downtrend, we're just looking to establish the weekly higher lows. As I've just said, we are in a very nice weekly uptrend. So just looking for the weekly higher lows coming into one of our majorly contested areas right now, which is short-term support around the 415, 416. If we lose that, however, guys, the bulls will be giving back a lot of this move, and we may just end up in somewhat of a tightening range prior to earnings, right? Earnings on October 22nd is going to be the one that everybody's looking out for. How do you know that this daily downtrend or this daily downswing right now is finished? Well, we need to recapture the hourly uptrend, guys. Microsoft has not recaptured the hourly uptrend just yet, so need to see an hourly uptrend recapture. Then you know the daily downswing is done, and then we look for the size of the move on the recapture to be able to know, do the bulls have enough space to warrant possibly a daily trend change? So keep that in mind for Microsoft, but I do maintain, even if it falls all the way back down here, guys, I'll be looking to heavily shop for some Microsoft options down here, of course, on the long side. Moving into Netflix right now, Netflix really also doing a whole lot of nothing over the past couple of weeks, right? We broke through the all-time highs, and now we've just been kind of sitting, just kind of chilling above here right now. I wouldn't say there's any red flags whatsoever, though. Nice daily uptrend, looking for the daily higher lows for possible continuation of that daily uptrend. However, if we break yesterday's low at this point, 699.54, that would be a daily downtrend underway, and it would possibly be further weekly consolidation, or rather the start of weekly consolidation, because now we're just on this really nice weekly upswing, even though it's been a little bit slow, right? Below us, very decent support, about 700 down to about 671. So keep that in mind when we pull back into this area on Netflix. Netflix, true to its fashion, will be one of the first names reporting its earnings coming up on October 17th. So I wouldn't be surprised, guys, if leading into their earnings, price action may be fairly muted, right? Not expecting a massive flush, but we're also maybe not expecting a massive rally towards the 800s, right? If anything, the bulls remain in control, maybe just expecting a slight grind higher moving into earnings. Moving into NVIDIA right now. So NVIDIA also looking pretty good today, 1.58% in the day and another 1.17 in the after hours. Not looking too bad at all, guys. The Bulls playing great defense where it matters the most, right in this area of support, 120 down to about 114. Not looking too bad. Daily uptrend. The Bears took back a lot of this move, but the Bulls playing some very good defense right now. Pay special attention to this area, though, 113.21. Break that to the downside. Daily uptrend is unfortunately lost. And then we open the door for the lower high, using the support now as resistance and lower low, which would just kind of perpetuate the same thing as SMH, your semiconductor ETF, right? Maybe just a wide tightening range on NVIDIA. As of now, they haven't been very, very strong, right? Nothing, guys, since pretty much the month of June. Struggling every single time to reach the all-time highs. And that's the problem, guys, when you are your own worst enemy in NVIDIA's case, right? The growth story is still good, but it's not what it was back here when expectations were extremely high, right? Now things are kind of settling down. NVIDIA is growing into its valuation, which is why we have so much sideways momentum right now. I still remain the same. One of my favorite ways to play NVIDIA is in the event we drop further down below here. I'm keeping an eye on this weekly time frame. If we pull back, I'll be looking to write some short puts, 105 down to about 100. Love playing NVIDIA. This is just where I want to pick up the stock myself. Moving into Tesla right now. So Tesla coming down about 3.49% today. Unfortunately, now they did have fairly decent deliveries, guys. The deliveries came in actually above the expectation, largely due to some higher expected sales in China. But the numbers just were not good enough here, guys, to warrant Tesla's recovery story, right? So, which is why I've been saying for the longest time, right? Tesla, very good company, very good proposition for very good business model. If you like the energy business, the robotics business, the automation business in terms of full self-driving and stuff like that, right? But we have to acknowledge what's been happening here. This is just a byproduct of high interest rates. The entire auto industry has been slowing down significantly over the past 6 to 9 months, and Tesla is also not immune to that. Yes, they had some fantastic China sales moving on to in the most recent quarter, but North American and European sales just are not growing at the same pace as they were a few short years ago. So we will see how those delivery numbers translate into bottom line net margins for Tesla, bottom line EPS, and bottom line free cash flow when we get their earnings roughly in 2 weeks time. And we also get the robo-taxi event too. But today, once again, similar to exactly what happened back here. Once again, this is just another case of kind of a sell the news event, right? A lot of anticipation went into these deliveries, and they did do very good, but it just wasn't absolutely phenomenal to warrant Tesla pushing through this big area of resistance, guys, 265, right? We talked about it a lot. It's been a very big catalyst for Tesla, and now we're getting a little bit of a pullback. So I wouldn't rule the bulls out just yet. Still in control of this very nice daily uptrend, looking for the daily higher lows, right? We have a big area of support below us. 235 is the next big area. Looking for the daily higher lows, and maybe can they put in an extra leg and send us towards the infamous $300 level that these weekly bulls want to target, right? In the event we kind of fail right here, lower high into lower low, understand the daily downtrend is underway, and then at that point, just looking for a weekly higher low. Tons of space though, guys. Anything above 204, looking for a weekly higher low for a possible second or maybe third, if you count this time, second or third attempt at the 265 on the march to the 300s. In my opinion, that $300 march will only come if we get absolutely fantastic earnings and guidance from Tesla, and the robo-taxi event is extremely well received by the market too. Moving on to Palantir. So Palantir up about 2.83%, guys. This one will simply not go down, right? Still dealing with overhead resistance, however, $38 to about $39 is going to be the mark. And as you can see, guys, daily is just really sideways, matching up with the SPY, matching up with the QQQs. Nothing much to report here. Still keep an eye right now on about that 35.82. Break it to the downside. Daily downtrend will be underway at that point, and that is when you'll be looking for your weekly consolidation in the markets. But right now, the bulls are in full control. And of course, if we break the 38.12 to the upside, the daily uptrend simply resumes, and then our upside target remains that $40 psychological right above here. I am keen on waiting for a pullback, guys. I don't believe there's a good risk-reward trade up here, even if Palantir is looking very good. I would prefer waiting for an inevitable, eventually, daily downtrend into inevitable weekly consolidation, right? Palantir can have very, very beautiful moves up and then consolidate. Very beautiful moves up and then consolidate. Same thing here. Beautiful move up and consolidation. Beautiful move up, consolidation. You guys get what I'm trying to say, right? That's what I'm looking for right now. I just want a little bit more consolidation, improve my odds for risk to reward. If we pull back on the 34, 33s, I'll be able to write my $32, $31 short puts and get some very good premium off of those. That's the type of trade that I'm looking for on Palantir myself. But as of now, don't get it twisted, right? There's no red flags on this chart right now. The bulls are still in full control. So that's pretty much everything that we were looking at for the market list today. If we want to go through the biggest performers of the day, it has to be the China trade once again, right? You can see Caesars up here, Wynn up here, but that's just because they have a lot of exposure to their hotels in Macau, right? So Caesars doing fantastic. Pinduoduo on an absolute monster rally recently, guys. These China trades are excessively tough to chase, in my humble opinion. You really would have had to have been positioned prior to the stimulus news. Chasing Alibaba up here, a bit of a risky proposition. I'd be kind of keen on waiting for a pullback. The weekly RSI is really overdone at this point, so I'll be keen on waiting for a pullback on Alibaba. The other one that I like a lot is Baidu. I'll be keen on waiting for a pullback on Baidu as well. Maybe anticipating somewhat of a, 5+% pullback. I'd be keen on playing those, but right now, guys, very tough. Our daily RSIs are way overblown, right? On Baidu, 85, and also on the Baba trade, which are my two favorite names in the China trade right now. Even the Baba trade, 85 on the daily RSI, all pass. Can't really do it up here, guys. You really would have need to position in the early stages of that run up there. Another one that was notable, guys, is CRM. I really like CRM, even at these current levels right now. I think it's one of your SaaS companies that is the most undervalued right now. We did some valuation not too long ago. The PEG ratio is good. The free cash flow ratio, or rather free cash flow yield, is fairly good as well. And they have very, very good fundamentals, good net profit margins too. Look at these fundamentals, guys. Improving EPS over the next 4 years, improving revenue, no problems with this company. And now they've just set up the brand new weekly uptrend after so many months of consolidation. If we get a little bit of a pullback back here, if let's say we have some further market weakness, we had one the other day, but if we get more and pull back into the mid 260s, I will be a fan of bidding some CRM too. And that's just some of the ones that were on the winner's plate today. MSCI as well, notable for me, guys. Breaking out of a big area, guys. This is a very large area. Talking about roughly almost 2 years, guys. In January, about a year and a half currently, right? Breaking out. This is one of the sister trades for other companies, such as one that's been a very, very strong stock this year in S&P Global, and the other one being Moody's Corporation. MSCI arguably has just as good fundamentals, but has been slightly left behind on that trade in most recent times, right? But now they might be looking to go for it. So this one could be a very attractive setup for some continuation to the upside. And to the downside, guys, taking a look at the list, well, we have to talk about Humana, of course, getting absolutely destroyed. I would not be opposed to starting somewhat of a small feeler position in this stock right here, healthcare stock, but we have to be mindful that their guidance maybe for the next 2 years, because of their premium collapse that happened today, getting less money from the government because they don't meet the requirements for certain tiers anymore. I'm not going to get too much into it, but that's pretty much the logic behind that trade. I'm more keen on waiting for a little bit of a bottom out though. Full disclaimer, I don't like Humana that much. I'm much more of a UNH proponent, but there could be a swing trade here. We just need to wait for it to level out a little bit. Nike, we spoke upon yesterday in terms of the pullback. I would be a fan of buying some more Nike in the mid 70s. No rush for me right now. Mercado Libre is one that I have my eye on. You guys know that we absolutely destroyed this trade on the channel from all the way down here to all the way up here. Beautiful trade. I took profit at the $2,000 level. It was a swing trade, but full disclaimer, I do own quite a number of shares in my long-term portfolio that I'm not selling. But the next swing trade is coming up potentially soon as well. If we get a dip back into the $1,800, $1,700 level on Mercado Libre, I am going to be all for it, guys. Look at this monthly. Beautiful monthly uptrend right now. Pull back into the prior all-time highs. That would be a breakout, retest of the all-time highs, and possibly run for leg number, however many legs this is, right? Looking extremely good. And the fundamentals of this business, I'll cover it during their next earnings. Look at this EPS growth. Fantastic. Look at this revenue growth. absolutely fantastic. And this one is actually not that bad at all. We did the valuation down here. I'm gonna have to redo it, but the valuation is quite cheap, guys. Look at this massive EPS and revenue growth over the next few years. So there's just a few of the names that I wanted to cover with you guys very quickly. I gave you guys a bunch of swing trades in yesterday's video. Monday, you saw the portfolio. There were more trades there. Sunday was the top 5 options. And Saturday, I gave you 6 picks as well. So we've gone over a ton of plays, guys. But in the event you want more and want to see the trades that I'm live trading and in real time, always feel free to click the link in the Discord down below, guys. Would love to have you guys in there. We have a lot of fun, private live streams every Monday through Friday at the open in the morning, live trading too, and you get all my trade alerts and a lot of other stocks that I don't talk about on the YouTube channel that come in on a daily basis type of thing. So you guys know the styles of trades that I've been taking recently. So if you enjoy those types of trades, consider joining the Discord down below. And in the event you don't, well, you can always click the like button on the video. Would really appreciate it for the growth of the channel. Also consider subscribing if you're new, guys. We do these videos every Monday to Friday after the close. So hope to see you back soon. And lastly, as usual, if you have any questions at all, please feel free to leave them down below in the comments. If you want a second opinion on a stock, second opinion on an options trade, or just general macro discussion about the recession, possibilities of a market crash, I'm all here for you guys. Leave your questions down below in the comments, and you know that I usually always answer in the first 24 hours. So take care, guys. Always a pleasure. I'll see you in tomorrow's video after the close, and peace.